Hi all, welcome to the daily charts. In this video, 10 to 15 minutes, hopefully a bit less, let's discuss our day trading program and how to approach it, what are the benefits of this program, how can you fit, maybe this program fits your strategy, and how can you grow this program. And basically the idea here is that you can make a living out of this program long term, because it's not targeting a specific part of the market. It's targeting basically the whole market every day, different stocks, different environment, different targets intraday, different setups. It's going to be very clear in a minute, maybe two. So what do you need in order to start? First of all, you need to have the commitment to trade, not 5 minutes per day, not 30 minutes per day, 6 hours per day. This is a job. You want to make money? You can make money. The US markets are the best markets in 25, are the best markets ever by far. But you need to apply yourself. You need to come to work in order to demand payment, and you are responsible. This is a one trick pony. You're responsible for your income. Again, pretty much like I don't know, a driver, an accountant, a pilot, a doctor, a dentist. If you're a great dentist, you can make a lot of money. You have repeat customers. You can demand maybe premium prices. You have a great in a great location. You maybe can actually get more money per hour. This is exactly what we're doing here. So we're trading the prime location, that's the US equity markets. But we do need an office. We do need to practice. We do need to learn. So a dentist is not going to come after 4 years or 5 years of medical school and starts making money out of the blue. He needs to require a clientele. He needs to make a name for himself. Okay, now let's dive into our, I hope it was clear, the business approach. So the idea here is that you need to apply yourself. So first, those who think that day trading is 30 minutes or 15 minutes per day, and then you go to the beach because someone on YouTube said it, please stop it. Get real. Or maybe you can do it. I cannot teach this type of a practice. I don't know if there is any job across the globe that you're coming in, applying yourself for 15 minutes, you make money, and you go to the beach. I mean, this is not. Then it's not a job. It's like hawks or maybe a fata morgana. Okay, so now let's get right to it. So what do we need in order to start a business? Any business needs capital. Any business needs a business plan and knowledge. So this is where we start. If you live in the US, in order to day trade, you need at least $30,000 in your trading account with the US broker in order to apply, or in order to day trade. If you live outside of the US, and then it depends where, you can trade a US account with $10,000, maybe with $20,000, depends. I'm going to talk about $10,000. So in the US, you need the capital that you need in the US, and this is super important to start with, is $30,000. And that gives you buying power of $120,000 intraday and $60,000 overnight. The overnight section, we are not interested. We're going to just focus on maximum $120,000 of buying power intraday. Okay, that's important. And if you live outside of the US and you deposit with a broker $10,000, some brokers will give you 4-to-1, others will give you 6-to-1. Let's say they give you 6-to-1 and you have a buying power of 60K. If you live outside of the US, if you deposit 10,000, if you deposit 20,000, you have exactly the same as in the US. So the pattern day trader rules don't apply if you live outside of the US. Okay, so you need a business plan, because every business needs a business plan. We're going to talk about it in a minute. And you need to practice. So I'm not pretending that this plan that we are basically teaching is doable immediately. If you are already trading for 2 to 4 years, you can implement it probably after a short session. Maybe you don't even need a mentorship. Again, it's up to you. But if you are a novice trader, you do need our mentorship. Basically, the implementation will take up to 6 months. So first you trade 4 to 8 weeks on a demo platform and prove yourself that you can make money. And then the implementation, meaning the first stage, will take up to 6 months. And if successfully make money on the first stage, then the sky is the limit. Because the growth potential when we're trading the US equity markets is limitless. You immediately see that when you start with this program, you're going to trade, if you live outside the US, a $10,000 position. And you live in the US, a $20,000 position. So what is a $20,000 position? If you buy NVIDIA 100 shares, right now it's going to be 100 shares. The price of NVIDIA is today, if I'm not mistaken, $190 per share. So you're going to trade a position of 100 shares with $20,000. And if you trade $15 stock, you're going to obviously trade, I don't know, 1,200 or 1,300 shares. So the way to scale these quantities is limitless when you trade the US equity markets. So the idea is that you start small. And the program or the business plan is as follows. You trade 5 to 10 trades per day, long or short. If the market is very weak, you focus on the short trades. If the market is very strong, you focus on the long trades. If the market is hovering between the 0 plus 0.5% or minus 0.5%, you can trade whatever you want from a predetermined list. I talked many times about this list. We'll explain it again today in this video. So this predetermined list, which is basically will be around 20 to 25 stocks will be on the list, long and short together. So it's not going to be a list of 1,000 candidates. It's not going to be a list of 100 candidates. A very narrow, condensed, predetermined, very hopefully lucrative list. And the strategy, and now we're getting to the strategy, or the base of the strategy, is that when you're going to lose on a trade, you're going to lose maximum of 1%. Not $10, not $100, we're talking percentages. So your position is going to be, if you are in the US, $20,000, meaning you can lose up to 1% of $20,000, that's $200. So the maximum loss is capped at $200 if you trade with a $20,000 account. And if you are outside of the US and you trade with $10,000, it's going to be here $100. So again, if you trade outside of the US with a $20,000 account, so it's going to be the same. So the idea here is that you limit with a stop order your losses per trade to up to 1%. Why is it crucial? Because if you don't limit your losses, okay, you are a novice trader, you will bound to make mistakes. Those will pile up and eat into your profits, and this whole program is going to fall apart. So you need to be very careful what you trade, how much you trade, and the quality of your trades are super important. Therefore, this 1% risk per trade is crucial. Now let's talk about the winning trades. Okay, the idea here is that you want to gain per trade at least 3%, and if the market will give you another 3, 7, 10, whatever, even better. But the maximum that you're gonna wait, time that you wait until you take profits, is 3%. And the aim is not to gain 3%. The aim is to gain 5, 7, maybe 10% on the trades. Okay, and what is the potential to grow after 6 months? Instead of trading with a $20,000 position, you can trade with either a $25,000 or $30,000 position. So instead of buying on average 400 shares, you're going to buy 600 shares. Now let's talk about really how does it work, the profits. Okay, so let's say you are trading a $20,000 position, you are in the US, and you're trading a $20,000 position, and this is the idea that you're going to make on one trade 5%. $20,000, 5%, and it doesn't matter if the share price is $150 or $5, because $20,000 is $20,000. If you live in the US and trade the US platform, you don't care, because you don't pay even commissions. So the commissions are zero whether you trade a 5 share position or a 5,000 share position. So this is a no-brainer, which is not the same for those who are trading outside of the US. But I'm talking about a US trader. So in this case, the position is $20,000, and you make intraday 5%. That's already $1,000. Okay, and then you lose 2 trades, 2% each, 1% each. You go down to 3%, and then you deliver another intraday trade of 4%. So basically, you have 5 plus 4 minus 2, 7%. 7% on 4 trades. Now, can you get more? Of course. Can you lose 4 times in a row? Yes. If you are weak enough on that particular day and you lose 4 trades in a row, you throw 4 interceptions. How many times a good quarterback is going to throw 4 interceptions? Not very often. If he's going to do it every day, he's going to be fired. It's going to be the same with you. So if you're going to keep losing 4 trades every day, something's very wrong. You need to stop trading and going back to practicing with the demo. Something is wrong. Or take the mentorship, or do something. But this is the maximum loss that you're going to incur. So on a given day, okay, if you are a US trader, you shouldn't lose more than $800. That's full 1% on 4 trades in a row. Okay, so that's highly unlikely to happen according to our strategy and our experience, but it can happen. Okay, so this is how you deal with that. So the idea here is that on average, and I don't want to throw random numbers like people are doing, exaggerating. So you can easily beat the benchmark of a day trader, or the benchmark that you have today using this approach. So if on average you make only 4% per day, okay, not 10%, not 7, 4% per day on 5 trades to 10 trades. Okay, 4% per day on $20,000 is 800. That's 16 grand per month. Okay, on average. And I think this is a doable target for somebody that's trading 6 months to a year. If you are more experienced, you will do way better. I will explain the process in a bit using the charts right here, right now, live. And if you live outside the US, it's going to be half, because you're using half of the buying power, and on top of that, you're going to pay commissions. Outside of the US, traders do pay commissions, but that's a benefit to US citizens, and I think also to US residents, although I'm not sure. Okay, I don't know which qualifies under which broker. Maybe there are different rules, and I always traded from outside the US, even when I traded with Schwab, with Thinkorswim, with MB Trading, and many other platforms. That's that. I hope it was clear. Now let's go. Let's dive into the example how this how your trading day is going to look like. Okay, so now guys, let's dive into how your trading day is going to look. So your trading day is going to look as follows. You're going to search for the biggest movers on the upside. In this case, I have a list here of 11 stocks, 12 stocks again. And the criteria for the search is volume over 4 million, price change over 4%, intraday range of at least 5%, and stock price over $10. Now, if for whatever reason on this list are 30 stocks, and on a given day there can be a lot of stocks here, then you basically need to upgrade your criteria. So the volume will be 5 million shares, the intraday range will be 6%, and the percentage change will be 7%. So all those numbers are scalable. The idea here is to have on this list anywhere between 10 and 15 candidates after an hour. Keep in mind that at the morning you don't have a lot of candidates. Okay, but after an hour and a half, you're going to have anywhere between 5, 10, 15. And those are the stocks that you're going to trade. Now let's dive right into it and see what's happening. Okay, today, so the markets are not doing much, or actually they're actually a bit in the red, but let's press the button. So I'm looking at a stock that's up 130%, another one that's up, as you can see, 27%, Wolf is up nearly 10, AS near 9, JX, James Harder, whatever, MSTR, MicroStrategy is up 7% or nearly 8, NBIS up 6, BMNR up 6, and so forth. Okay, so now I'm searching. You know, searching is the toughest job in day trading. Basically, we're pressing the button. Okay, so and I'm looking, guys, first at the daily chart, and of course if I have multiple screens, and I'm sure that most of you, if not all of you, have multiple screens, you're going to look at the intraday chart and the daily chart. Obviously the chart is showing a huge sell-off after the gap up. Okay, fine, let's take a look at the 3-minute chart and decide if we want to trade, and if so, where. Keep in mind that when a stock is up 130%, there will be some profit taking. So the possibility is endless. You can short it if the shorts are available. You can buy it as long as you can find the intraday setup that suits your strategy. And now I'm coming to the most important thing. You cannot risk on any trade more than 1%. So you have to be very, that's max. Max risk is 1%. So if you risk more than 1%, this whole program and strategy is going down the drain. So the idea here is that if the stock price is $19, okay, then the stop loss won't be more than 20%. Sorry, 20%, 20 cents. Now, if the stock is spready, which can happen, or very illiquid, okay, we don't want to trade illiquid spready stocks. Okay, so we're not going to trade whatever Alma is doing, and let's move to the next stock. Keep in mind we're going to have 11 to the downside and 11 to the upside. So we have midday at any given time dozens of stocks available for us to look for an entry point. And again, I'm looking at one entry point, you're going to see additional entry points. So the entry point is basically your own input. Okay, the list is delivered by the platform. Now the entry point is your input. The better the input, the better the result. And again, the strategy only tells you risk no more than 1% and try not to limit profits. So worst case scenario is you lose 1%. Best case scenario, it moves 3, 4, 5, sometimes 10% intraday. Okay, let's take a look at the number 2, ARV, whatever it is. Okay, so here we have a $14 stock. Let's add the VWAP because I'm using the VWAP. So for example, if I'm looking at this trade and I'm an experienced trader, I'm looking at the stock that gapped up, delivers a high, pulls back to the VWAP, and then moves higher. Now, if I'm fast enough, maybe I can buy it either at 12.80 or at 13. If I'm buying it at 12.80, my stop loss is 12.60 something. So that nearly fits the 1% strategy. Or at the VWAP. Or if I'm buying at 13, I can use a 12-cent stop loss. And guess what? The stock is moving up from 13 to over 14. On a $14 stock, this is 7%, something like that. Here you are, you reached your I don't want to say daily goal, because again, we don't want to cap anything. Sometimes you can make 14% in a day, and sometimes you won't be able to make 14% for months. Okay, so it depends on so many factors. Now, can ARVN close at 15 today? Yeah, why not? It's now 12:30. What's the time now? Hold on a second, let's bring in the time so you will understand exactly what I'm talking about. So now it's 12:46. There are 3 hours and 15 minutes to the close. Can this stock deliver another 50 cents to the upside? Yes. Can it come back to the entry? Yes. So all the scenarios are on the table. Now, if you are using a strategy, and again, it's your money, your decision. The idea here is that if you bought it at 13, okay, the idea here that if you bought it at 13 with a tight stop loss, you move the stop loss to the entry and you don't move the stop loss until 4 p.m. That's the strategy. So whatever happens, it can come back to the entry or it can move to 15. If it moves to 15, you're getting paid for a couple of days on this one trade. Okay, so that's the strategy. We're not trying to micromanage trades, only on the downside. On the upside, the idea here that if you micromanage trades to the upside, you're going to end up with micro results. And the idea here that we don't want micro results, we want huge results. I'm just giving you an example. Basically a random trade of a $14 stock out of nowhere. Okay, let's move to another example. Terra Wolf, WULF, that's the symbol. As you can see, it's up today 10%. Okay, so what happened today? It started with a move higher, pulled back, moved higher, and now you can see it delivers higher lows. Can you trade it? If you can trade it, find an entry with the 10 cents, sorry, not 10 cents. Yeah, it's basically 10 cents stop loss or 12 cents stop loss. You cannot find it for myself. I'm thinking I'm not qualified enough to buy those pullbacks on this channel to the upside. So I myself won't trade it. But if you can trade it, do it with a 1% stop loss. And can this stock deliver 5% intraday or 3% intraday? Obviously, a stock that's already 11%, okay, it's up 11 because it moves from something like 11.50 to 12.20. That's roughly 6 to 7%. So another potential 7%. Keep in mind, you're not going to be able to trade all those stocks. You're going to miss ones. Others will lose money. Let's move to another stock. And again, nothing spectacular today. AS. Okay, so where would you buy AS? First of all, it's gapping up a lot. Yeah, maybe 8% or 7%. Then pulls back. Then delivers the move to the VWAP. Pulls back again. Moves higher. Pulls back. Can you find an entry point? Now, again, my strategy is to use round numbers and VWAP. So for example, my strategy will be enter at 33, use a 30 cent stop loss. In this case, the stop loss is not 30 cents, it's less, maybe half of that. So that's something that I can trade. For example, entering here at 33. And now the stock moves higher, and then comes back exactly to the entry. And if my stop loss is at 33 and not under the VWAP, I will stop out and miss on this 3% move. That will happen many times. Okay, so as I'm saying, there are great trades, there are frustrating trades, there are losing trades. The idea here is that you cope with everything and work. This is a business. So you trade five positions per day, then 6, then 8, then 10. Out of those 10 trades, 4 will be losers. You're going to lose 4% on 10 trades. 2 will be big winners, and 3 will be nothing. Let's call them coming back to the entry. So you'll have 7 and 7 minus 4. That's 10% per day. No commissions because you live in the United States and trade a US platform, and you end up with 2 grand per day. That's work. That's hard work, but I don't think anybody here that's day trading won't mind. Okay, this is because this is something that you can do tomorrow and every day, maybe in perpetuity. Maybe it depends on your own basically personal background. So I think it was clear enough. If anybody has any question, I will be glad to answer any questions. Anybody that took the mentorship, either the 3-hour, 6-hour, or 9-hour, which is the maximum mentorship, delivered good results. Some of our students that delivered great results. Again, this is up to you. Basically, being that you are a trader, and nobody's putting a gun to your head to trade without practice. So the idea here, and this is very important, hold on a second. Okay, so coming back to the idea that you must practice, okay? Because this is a job that needs pretty much like I said before, like driving, like a dentist. You need practice, you need to hands-on. So if you're not doing a good job in your first month, over the first 2 months, put it aside, put your account aside and practice. Come back to this demo practice. Redo the mentorship. Redoing the mentorship won't cost you anything. So do everything in your power not to miss out on this opportunity, because I believe that the opportunities in the US equity markets will only improve. So 2025 was amazing. Maybe 2026, not maybe, it will be way better for traders. Okay, maybe the market will drop 25%. We'll short it. Maybe the market will move another 50% to the upside. We'll buy it. There are so many opportunities. Intraday, on the daily chart, investment. We're talking about a small world is basically day trading. And again, you are very successful at day trading. You can move to swing trading, but that's something that at this point I don't want to mix day trading with swing trading, and because those are two different disciplines. Okay, guys, I wanted to talk for 15 minutes. As you can see, it's nearly double of that. Thanks for being with us. Do like and subscribe to our channel. If you don't want to take the mentorship, we'd love to have you, but if you don't, you can learn cheap, free from our channel. I think it's one of the best, if not the best, on hands learning channel on YouTube. That's my opinion, being in this business for more than 15 years. But I'm biased. Okay, so that's your decision after all. Again, thanks for watching. Do like and subscribe. See you in our next video.